Hey everyone, welcome to the Cash Flow Chronicles. I'm excited to launch the first webinar here in this monthly series that's really going to be focused on something that's really critical to most businesses these days, and I feel like it's not addressed specifically as well as it should be. So what this is going to be basically a monthly webinar roundtable where we bring in different experts to talk about varying topics. And it's addressing common challenges that businesses are faced with, as well as questions you ask us. We want to make sure this is definitely an informative session that really does not have any pressure or anything like that, just to add value to as many people we can and in a short, efficient manner. So want to feel really privileged to have my good friend, Scott Harris. Hi, Scott.
Hey, Matt. How are you?
You can tell it's not Scott Harris of the Detroit Tigers there. It's another Scott Harris, Scott A. Harris. He's actually an experienced business banker here in Metro Detroit, and he's had plenty of success, and looking forward to hearing some of the things he has to share with us.
Yeah, I look forward to talking about this topic of cash flow, Matt. I think it's a very timely series that you've created, the Cash Flow Chronicles. And I'm not only excited for this conversation that you and I are going to have, but I'm excited about the future series as well. I also want to, on the topic of cash flow, say that I know, as you just referenced, it's not talked about nearly enough, because cash flow is the most critical aspect to really any single business. And so whether it's managing it from a standpoint of, hey, what is my business worth? Or, hey, how much debt can I carry? There's nothing really more critical than cash flow.
Yeah, I think that's super critical. And the cliche saying of cash is king, honestly, is a cliche saying for a reason. So, and I think what's important to have experts like Scott in is because most business owners or leaders are focused on their business. Having someone that can bring in an objective take from a third-party perspective is super critical. And sharing best practices is something that I think is a value add. I'm honored to have you as the first guest. I really am, Scott. So thank you so much.
Yeah, thanks for inviting me.
So let's dive into the topics here. Scott, so really right now, the financial environment is a very dynamic right now from a standpoint of risks. How can banks really play a central role in managing that financial risk perspective from a business standpoint?
Yeah, that's a really good question, Matt. So when I think of banks evaluating risk, or really the primary focus that people come to us is the extension of credit, I think of a three-legged stool where each of the legs are character, cash flow, and collateral. May seem a little simple, but those are really the three most critical aspects that we evaluate. And I know it's not the topic of today's conversation, but character is by a large amount the most important factor that we as bankers consider, because it's ultimately the character of the person, their ability to run and operate the business plan to execute it well, that ultimately repays the bank whatever leverage that we extend to them. And then right behind there, obviously the topic of today's discussion is cash flow. Cash flow is critically important for a bank. While we look at collateral, the third leg of the stool, banks want to be repaid through cash flow from operations. We don't want to be paid through liquidation of collateral or any other means like that. So we look at and evaluate cash flow at a very high level.
Okay, that's helpful. I appreciate that quite a bit. Yeah, it's super vital, let's be honest. Cash is really the most important part of any business from that standpoint. And how can you bring both certainty and flexibility in your business, which is something I think we both take pride in doing that for our clients. So whenever we can, in building plans appropriately. So one of the most important and vital aspects of financial risk management is having the right tools in place. Could you walk us through some of the key products and services that businesses can use, whether it be letters of credit, trade finance, and even credit lines?
Yeah, so there's a couple things that come to mind. So one is the proliferation of fraud within the entire financial system, Matt, is at the highest level that it's ever been. The proverbial bad guys are finding more creative ways each and every day to infiltrate either a company's or a person's computer, their systems, their software, their email, and they're using that to steal in some way, shape, or form. So it's important that companies have those tools in place: firewalls, internet security, dual authentication to make sure that they're making sure that there's more than just one simple password for signing in. So when I think about that, right? So I just talked about fraud. There's some products and services like Positive Pay and ACH Positive Pay, which can help a company eliminate the likelihood of that fraud occurring. And it's really an important tool for them, making sure that they're safeguarding their cash.
Yeah, I can think of I'm sure many of you out in the audience are familiar with cybersecurity, cyber insurance, which is pretty vital. You look at how many companies in the past couple of years that have been affected by malware, some level of virus that has come in and stole data, because data is a big vital asset right now. So having those things is super, super critical. I like to talk about too, in my particular role, we have something called ghost companies. So if you're extending credit terms to this particular company and you establish credit to them on trust or a credit application alone, what if they just disappear like a ghost or they just fall apart? Many times we've seen that some individuals create side companies just to get credit from a business, only to disappear out of thin air. So definitely some things to think about. Absolutely. So Scott, economic factors, many people know, the economy, inflation, interest rates, tariffs, many factors in place right now. What are some of the things that you're seeing at the moment and advice you have to businesses in uncertainty, to be honest with you? It's to some extent.
Yeah, well, there's always going to be risk in business, right? And so, on the topic of tariffs, inflation, interest rate, risk, Matt, I mean, those are probably three things that are on everybody's mind right now. In particular, if you make something abroad, the tariff is probably top of mind, right? Whether it's in Asia, whether it's in Central America, wherever it is, right? That is, the current administration has said that that's on the table. So it'll be interesting to see how that plays out. I think other factors that companies are focused on is what's going to happen with interest rates, and are we going to continue to see an easing of inflation, right? And I think it's a matter of time to see how those ultimately are going to play out.
Yeah, I think the news comes out every couple months. We need an interest rate cut. The Fed's anticipating 2 cuts this year, and no one really knows. It's really just looking at benchmarks, and realistically, I don't think anyone can tell. I mean, would you agree from a banking standpoint?
Yeah, I would agree, because there's the experts out there that say we're going to get 2 this year, but really nobody knows how the economy is going to perform. I think if the current administration doesn't get some of the things done that they say they're going to get done, there'll be the unmet and unrealized expectations disappointment, which could impact a lot of different things within the broader market.
Yeah, it's been a pretty influential first couple of weeks under the new administration, that's for sure. So we'll see kind of once things settle down a little bit what the effects are going to be. So good or bad, we really don't know. So on the topic of risk, so it's a huge concern for many businesses, especially with disruptions in supply chain, changing market dynamics. How can businesses work with their banking partner really to help offset these credit risks that happen and really manage their business with that certainty and flexibility with cash flow top of mind? Because AR is obviously quite a vital piece to their business.
Well, it's critical, and accounts receivable make up really the majority usually of a line of credit facility that a bank would provide to one of its customers, right? So if you think about, the aspects of AR, inventory, and AP, evaluating that flow is critical, right? So if a company has, a line of credit in place, in particular, a more sizable one, what the likelihood of them having to report, those three items as well as a consolidated borrowing base report, Matt, is likely. And so as a banker, right, I can help my customer determine if I'm seeing risk by perhaps they're having some concentration of a particular few names that they're selling to. Maybe on the payable side, right, I'm noticing a key supplier, and again, back to the tariff conversation, where's that supplier's products coming from, right? So there's a lot of different conversations that I can have with my customers as their banker to, make sure that they're thinking about these things, and if there's levers or actions they can take, that they're taking them.
Yeah, and I think what's important too, everyone's busy running their business, and I'm sure these things are top of mind for anyone, but many people don't have time to dedicate the extra efforts to have an expert in different areas, and this is where we come into play to really be that second hand to say, hey, I noticed this, or do you have a plan around this? Can I offer my insights? Things like that. That's super critical, because ultimately we want to be in the pocket of these businesses as trusted advisors. So I think that's a big piece.
Yeah, Matt, and like to the point, like if we're noticing trends, or there's a need for additional capital that you wouldn't be able to authorize, or not authorize, but provide during a normal context, right? I mean, one of the things I've done in the past for a lot of different customers is provide trade credit insurance, or have them explore the possibility of trade credit insurance, and that allows them to sell more confidently to their customers, because they know that they have evaluated the risk of that particular client, and they know that they have insurance that protects it if for some reason that particular receivable or company experiences an issue, anywhere from just paying late to an outright full bankruptcy.
Yeah, I appreciate the plug there, and it is a shameless plug. If you haven't looked at trade credit insurance, at least looked at what it makes sense and understood that it really is a tool to grow your business versus just insurance, I think that's a big thing that you need to take a look at. But that's definitely, appreciate that, because it's a very vital tool that many people haven't explored. So thank you for that.
Well, and Matt, I think there's a lot of lack of clarity on what it actually does for the company, right?
Yep.
And if you really just simplify it, right? If I ask someone, hey, what if I knew a company that could deliver the best information to you to make credit decisions better than anything you're using today, and that company provides coverage for your receivables if they ever go bad, most people would probably say, well, yeah, that makes sense at the minimum to have a conversation like that.
And a credit department's a pretty vital part of any business. But what if your credit department is wrong, or has some information that they just simply can't get, and you take a risk? Well, what if that risk was fully guaranteed and you could sell more? That's something I think people fail to sometimes understand from a context standpoint. So again, thank you for that. I really do appreciate that. So let's go on to the next topic, is technology and how its role is and to enhance risk management. How do you see these digital tooling and technology solutions playing a role in the future of business banking?
Yeah, I mean, so I'll tell you what, the level of accessibility for both a consumer or a commercial banking account through their phone, through their computer, has changed dramatically in the last 10 years, right? If I look at the consumer side, right, there's, Zelle, there's Venmo, there's Cash App, there's, PayPal, there's all these different mechanisms that are non-bank related to send cash to your friends, or potentially even relate to a business, right? If for those business customers, they can access really their entire bank account on their phone. They can send a wire transfer, they can send an ACH, they can receive money verify receipt of the money. So, digital banking has come a long way in just the past few years, and I expect that it's going to continue to evolve to be even more powerful than what it is today.
I just sent you a transfer, Scott. You didn't see it, but it's that quick.
Well, that was fast, Matt. Thank you for that.
It was only $1, but just for the point.
Okay. Well, thank you.
Thank you for that. And I definitely agree because I have apps on my phone for my personal account. I barely go into a physical bank location anymore because I simply just don't have a need. So some people do, but at the same time, the technology continues to grow. So so we covered a lot of ground today in a very short, complex amount of time. So want to make sure that the questions that the people that listen to have for us can be addressed. So I think before we jump into some of those questions, do you have anything that you want to close with before we get into those details?
Yeah, I guess when we look at the topic of cash flow and reducing risk within a business, Matt, which ultimately creates a more valuable enterprise to the owner or the shareholders of that company, right? I really call it, focusing on the 3 Ps, which are people, products, and process, right? And so on the people side, right, I'm stealing a line from Jim Collins' book, Good to Great, which is one of my favorite business books. If you haven't read it, I highly recommend it. But Jim's line in the book is get all the right people on the bus, all the wrong people off the bus, and everybody in the right seat. And so I think if, as a business owner, right, if I'm evaluating risk, the biggest factor that I can have of risk is not having the right people executing my business plan. And so as the business owner or executive looking at that bus, they can see whether there's voids or whether maybe there needs to be changes in people with different skill sets than are there today. On the process part, right, I mean, it's important to have a documented process to make sure that the business is able to duplicate success each and every time by following a particular flow of events that ultimately result in a great service or a great product for the end user. And then lastly, on the products, right, it's about making sure that you have the access to the raw materials to produce whatever it is that you're producing or the experience you're providing, to make sure that you have the distribution to deliver it to the right place, then ultimately the technology to make sure that you're collecting on that service or product delivered.
Yeah, I mean, that's a great reference point because really when it comes to cash flow, all those are critical elements to the business in totality. One thing that a book I read as a young child that was called The Energy Bus, same idea where you're on positive trajectory when your personal life and there's people that bring you down a bit because they complain or they just aren't supportive of your growth. You kick them off the bus, a somewhat negative perspective, but in the same framework, you're driving towards success together with the right people. So I think that's critical for how we both feel with the businesses we work with, as we want to see them succeed, as we want to see each other succeed. So
absolutely.
Let's dive into the questions that just have 3 this time. So if you have questions, this is an evolving conversation, so please keep them coming to us. We'll be sure to get them answered for you. And moving forward, if there's any other questions you have on different topics, please let us know. We want to make sure we address your concerns or topics. So the first one, there's a common thing that we hear about in the marketplace today. It's called AI. Are you familiar with AI?
AI? No, never heard of it.
I mean, is it alien?
Alien
Alien
interface. That has to be what it is.
No, let's be honest, Scott. It's artificial intelligence.
Artificial intelligence, of course it is. Yeah.
That's what it was called. Okay,
yes,
perfect. So,
absolutely.
All right, so where do you see this in the next short term? Can you answer that from a banking perspective?
Well, from a banking perspective, I can tell you that we're already exploring how we can use it, right? And it's going to be in every single industry. I don't care what the business is, from mining to food prep to everything in between, right? And making every kind of gadget you can think of. But what I will tell you is this: I don't know what a lot of people don't know, which is really what this is going to look like in the end.
Yep.
I think we're in the first minute of the first quarter of a 60-minute game when it comes to AI. And I think really none of us are going to know until it fully evolves. But I will tell you this, that like a lot of technology, there are, or is, I should say, the tendency to say, I don't want to do anything with this. I don't want to know about it. It's not applicable to me. And I would tell you that my opinion is that people need to maintain an open perspective because it's going to be pervasive in all business, and those people who refuse to adopt will probably be left behind in some way, shape, or form.
And I think for the younger generation of students, they already know AI. So when they come into the workplace, if you're not adopting AI, you're probably behind the curve, to be honest with you.
Totally agree.
One thing I had shameless plug again with my company, we go back to 2014. Who has heard of AI way back in 2014? Geez, that was 11 years ago.
It's 11 years ago, and I would say not many people, Matt.
So we actually took a tool. We have a lot of data here. So if you take credit reports, different details like that, we have more data and a lot of proprietary data. So we actually built a model way back in 2014 that was able to help predict insolvency and financially challenged companies, leveraging AI to do the work so we can be more efficient with our relationships. So that's just one thing way back in 2014 that was done. And now we've evolved it so much more to be almost razor thin with a precision standpoint and how we can identify challenges of companies.
That goes back to that point that I mentioned earlier of selling more confidently to your customers.
And that's, again, if you haven't explored trade credit insurance, it's worth the conversation, truthfully. It pays for itself. So I thank you for that. Appreciate that. The next question. So selfishly, if I was a banker, or if I was an actual business and a financial leader of a business, what should I be looking for in a business banking partner, one that truly would add value to my business from your perspective?
Well, Matt, I think that's a great question because banking has become an industry that it's hard to distinguish yourself from everyone else, right? And then in addition to that, there's a lot of different, I'll call it pseudo banks out there that have come into the market, right? They're extending capital, but they're doing it through a different means. They're not subject to all the federal oversight and regulation that a traditional bank is. And so, there's a lot of different, I'll call it deployers of money out there. But with that being the case, right, I think the biggest thing that a traditional bank needs to do and banker is they have to sincerely and authentically take an interest in understanding their customers' business. And I think I may have told you the story before, but I was working with a gentleman in mid-2024 who had told me he had been with his bank for 10 years, and he said, if I asked them the question simply, do you guys know what I do? He said, I don't think they could answer the question. And so I think it's incredibly important for a banker to fully understand and take a sincere interest in their customer's business.
Yeah, and as I said, as far as you're their right-hand man, you're a part of their business. You're a critical component because it's cash. There's nothing more important. And if you don't understand their business, the bank just sees you as just a commodity. What value is that relationship, to be honest with you?
That's right.
One thing that I've seen a lot of right now is a lot of merchant cash advances taking place in the marketplace. In the news here just a couple days ago, MyPillow, Mike Lindell, very political with his commentary, which is what it is, unfortunately. But he is under a lot of pressure from an MCA where he's actually suing these merchant cash advance companies. His actual weekly payment is astronomical, where it's going to put him out of business because it's just simply making sure you read the fine print from all these additional sources of lending. There can be some challenges, and I think it's important you read every fine detail and you trust the relationship and face-to-face conversation, to be honest with you.
Yeah, I mean, and so Matt, that brings up a really unique point that we haven't talked about, right? Is if it's too easy to get the money, there's probably something wrong, right? And so, like a traditional bank, like if we go through a normal process, I mean, it could be 30 to 60 days to provide the end credit facility. It could even be longer than that if it's a super complex situation or if there's appraisals and environmental due diligence that needs to be performed, right? But if someone says, I can get you $1 million tomorrow, well, there's probably some strings attached to that you really need to focus on.
And keep in mind, it's in the fine print, and there's a lot of people that have fallen for this. So it's the intentions are there, but at the same time, I don't think any business wants to be malicious. But it's just that business model that's there. We want to make sure that you find something that fits appropriately. I'm never one to disparage any business, but at the same time, make sure there's trust in that relationship. So
yeah, trust is important. Back on the question that you asked, Matt, of how a customer should look or what should they look for in a banking relationship. So we talked about, hey, do they really truly know my business, right? But another thing is my banker providing value that extends beyond just the traditional banking products and services, or are they only interested in making money off of me, right? So the analogy that I use is showing up to a meeting with two toolboxes. And one, of course, is going to have all the products and services of what's in the bank, and what we can offer. But the other one is almost 30 years of relationships of trusted friends and partners who have expertise that likely the business owner needs, and perhaps they don't even know that they need it. And so how you come about that is asking open-ended questions like, what are your priorities for 2025? What things could get in the way of you meeting your objectives? And by asking just a few open-ended questions, you're quickly going to find out where there's some obstacles that potentially the banker can make some introductions that could add some value to that company, whether they're a current customer or not, to your earlier point.
yeah, and I think that's super critical because it speaks to both of us in our character and integrity. And I speak very highly of Scott because even if I don't do business with the business I meet with, I will do whatever I can to help them out, to help them achieve their goals. If my solution doesn't fit at the moment, it's really just what can I do for you? It goes back to the whole rule of the servant seller. It's like, how can I help you? Help me help you. I think that's really critical for how we operate within our networks.
And that's a great philosophy, Matt. And that's why you have trust with the people who you work with, right? Because you are doing the right thing to try to help them out in whatever way that is, even if it's not with your toolbox per se.
Yeah, and I think it's critical in life personally, and we obviously all have numbers we have to hit, but I feel like when you treat people respectfully, it goes that way. So
It sure does.
Final question for you, Scott.
All right.
This is the big one. Are you ready?
Yep.
How can a business prepare for financial risk from potential trade policy shifts? Oh, there's these tariffs that are being talked about with the new administration. How can they prepare?
Yeah, I heard something about some tariffs. But no, I mean, on the serious aspect of that, Matt, I mean, it's really looking at, when I talk about the 3 Ps, right? So on the product, right, it's about making sure that there's not going to be a disruption or a sudden cost to the business that they aren't able to really fully absorb. And so it's about making sure that you have multiple people that can provide a particular aspect of the product if it's an end product that you make, right? It's about exploring different processes that or factors of how that could be made, maybe stateside or through more friendly stores, right? So tariffs, I know everyone has a lot of concern over them, but ultimately it's going to be, I think it's really important for companies to evaluate their sourcing probably now more than ever.
Yeah, I think with the global and what we're seeing from a global standpoint, the U.S. is probably the best economy right now. And obviously our economy is not, the confidence in our economy really isn't the highest. So you look at what's going on in Europe and abroad, there's many factors that are out of our control. And I think it's important to have diversity And have you ever reached some objections from individuals, unwillingness to listen to some of your advice sometimes?
Well, sure. I mean, not everyone is always seeking, for their banker to step outside of that box, but I find most people are, because I'm approaching it very authentically from the perspective of trying to help. And I think most people recognize that when someone's trying to help or ask questions like the way that I have, that they understand that I'm simply just trying to help them out in a capacity or provide an idea that perhaps they hadn't thought of.
And it just reminds me of a haircut I got today where my hairstylist asked me, she's like, do you think you're the smartest person in the world? Or would you want to be the smartest person in the world? I'm like, absolutely not, because the smartest person in the world asks questions because there's a lot other smarter people in their perspective area of knowledge. Because are we experts in any other particular industries?
No,
Yeah,
I'm not.
I can't manufacture. Maybe can hammer something, but and that's important to acknowledge that we respect everyone's expertise and just trying to build on what everyone knows. So thank you so much for listening to us speak for the first ever Cashflow Chronicles webinar episode. Your feedback is vital to this future. Let us know your thoughts, want to address topics you think are vital, and ultimately questions you have. This is going to be an evolving series, so if you have questions, if you don't address them on the webinar, shoot us a message, and let's just keep the conversation going. Your input's pretty critical in this, so thank you so much.
Thank you. That was good, Matt.
Yeah, a little more polished. I tried to crack in some jokes at the end.
Yeah.
To break the you got the vibe, so it's
Yeah.
like.
Yeah, I just was not there that second initial